I'm with Real Estate Financial Services. I've been with the company for now 13 years plus, but in the business for 21 years. So right after college, got my degree, went into a real estate company as a business management, computer applications used to call it in those days. And I kind of exceeded my admin stuff. And one day an agent asked me if I wanted to do an open house, and the rest is history. So I kind of fell into real estate and loans, and started in San Francisco with Zephyr Real Estate, and just moved up and moved to Skyway Bay years ago and started a family, and here I am. So I've gone through 3 different markets, except for the 80s. I'm too young for that, but that was the hardest one. Everybody thinks that 2009 was the biggest one, but we had tougher ones. So I was mentored by a good friend of mine. We're still good friends, and here I am, not just surviving, but delivering loans and educating, guiding every single type of buyer you can imagine out there. The flyer that I gave you is pretty much some of the niches or programs or products that you can imagine. Some of you have heard some of these, but I wanted to put it on paper, nice colored paper, so you can see it. My information and Maggie's at the bottom, and here we go. So any questions, stop me. I want to go over some of the stuff that we provide for today's market. I know rates have gone up. Everybody knows that. 21 years ago, rates were like 12, 14%. 15 years ago, they were at about 12%. And 3 years ago, they were in the threes. Now we're back to the fives and the six now, where the economy is kind of balancing itself out. As you see, gas prices have gone up and down. We're still under $4 here in the Central Valley. If you go to the Bay Area, we're in the $5. So it's a balance. Right now with the loans right now, some of the products, most popular products for first-time home buyers, the FHA. Does everybody know what an FHA loan is? It's a government insured loan. The banks still have to give you the loan, but the big stamp is the FHA loan. That's the most popular one for first-time home buyers. The minimum down payment is 3.5% down based on the sales price. If you have a better FICO score, meaning a credit score, usually once we run your credit report, if you are in the 700s, then we consider maybe a 3 or 5% down conventional loan. But you're probably asking, if I'm a first-time home buyer, is everybody a first-time home buyer here?
Yeah.
Okay. At first time, many people get that confused because like, I did own real estate years ago, or if I had a foreclosure, or I had a short sale. But what a first-time home buyer is in the bank's eyes, or in the underwriter's eyes, is if you don't own for the last 3 years, based on your tax returns, if you have not claimed any mortgage interest or property taxes for the last 3 years in your tax returns, you're considered a first-time home buyer. Okay? So there are great first-time home buyer programs that will help you with down payment and closing costs. And I closed a few this year to where I think one of the clients had to come in with $1,000, and only because it was the time of the property tax season. Okay, so we do have programs that do give you down payment and closing costs. So that you can be in San Joaquin County, Contra Costa, Alameda. We have it all around. Like Maggie said, we are licensed all through California. So wherever you want to buy, we are available for that. So anytime I'm giving you some of this information, if you have questions or ideas or concerns, please feel free to, because right now we're in November. Everybody's talking about taking a break in the holidays, and there's still homes for sale. There's still a lot of buyers right now. So I would love to help anyone who's still interested and get you guys into a house. Okay, so I talked about FHA. Conventional loans are different. It's a whole different world. It's a little more flexible than it used to be. Minimum down is 3%. We do have the 1% down for conventional. It's all going to be based on 3 things: credit, assets, and employment. So the better your portfolio is in front of the bank, the more programs are open. A lot of people say, well, if I have a great FICO score, then I deserve the best rate. Yes, and almost no. So what a good FICO score does, or credit score does, is it opens up more programs for you. So the higher the score, the more programs, the more doors are open for you, and the more banks wanna work for you. So my job as a mortgage broker is we have about 14, 16 banks I work with. We use your one only credit report that we pull. You get reimbursed for the credit report fee at the end of closing. And the credit report is good for 3 months, and it's the only one that we use from start to finish, okay? So that's one of the niches that we have. Usually people pull and pull and pull credit, and it's good and bad. So, but here at Real Estate Financial Services, our office is, I'm like 2 doors away from Maggie. So, in here, I mean, it's a nice building. We know our stuff here, and FHA is the biggest key right now for first-time home buyers. It's very flexible. So if someone, for example, why would I switch someone to an FHA? Well, if you had, just an example, 6, 7 jobs in the last 2, 3 years, most people say, no, we can't do that loan. Yeah, we can. My job as your loan officer is to keep all the bad stuff on my left hand and present the bank all the good stuff with my right hand. Once I give you a pre-approval letter, it's 100% legit. All you have to go get is go find your future house. And the longer you take, then all we have to do is just update the pay stubs and maybe bank statements or any other type of information that the bank needs. But conventional loans, you just want to make sure you have 1% down, 3% down, and 5% down for first-time home buyers or any buyer. A lot of banks like 10 to 20% down. You know, that's for, you know, anyone can do that. But if you're looking at your pockets and you're looking at the money that you save, we do have those programs. We also do different niches here. We do the I-10 program. I don't know if you guys are familiar, because everybody has different families and relatives. The I-10 program is for buyers that do not have a social security number. So if they don't have a social, we do I-10 numbers. And there are minimum requirements for that, but we do that here at Real Estate Financial Services. We also do the 184 program. And if you have relatives that are Native American, we'll have 1%. I have a client who's 1% Native American but has a tribal card. We can do the 184 program. And that's, yes, Maggie.
Excuse me, do they have to have the tribal card
Yes,
to prove that
yeah.
they are?
And-
So how do you get that?
Yeah, sure. So, and that's a great question. Some people don't even know they have that 1%. So what I always ask them is, okay, go down to, for example, this client didn't know, had that 1% Native American. I said, okay, go to the tribal and you go on the website. So depending where you live, I just kind of go on the website, the 184 program website, and you go to their office and they'll research until they figure out, yes, if you deserve a tribal card or not. So with the tribal card, now you open another door. And the nice thing about the 184 program is it's 2.25 down payment. The mortgage insurance is like half of what FHA is. And they're more flexible on the credit report. So if you have judgments and collections and things like that, it kind of benefits because they're not looking so much at credit, they're looking at the overall package. Versus FHA and conventional, you know, they're looking a little more less flexible than a 184. So we do the 184, or you can just go to your family member and ask them, hey, are we Native Americans? Yes, okay, here's the office, and there's local offices. They're usually about 30 to an hour away from, for example, Jackson, Lincoln. Here in San Joaquin, you gotta drive to Jackson, the area, for that office. Lamar, you know, so they're local, they're not too far away. But the 184, we do that here. We close a few. The interest rate's a little different. It's not too bad. They're about maybe 0.5% higher than an FHA loan, but you get all the rules and that FHA wouldn't allow. So it's a very flexible program. Okay. Yes.
Now you said that you can do 2.5% down on that.
Yeah.
So
yes.
will any of these grants cover that 2.5%?
No, good question, Maggie. No, the 184 is separate from the down payment assistance programs.
Okay.
So yeah, because they fit only one box, which is it's under the tribal. So very easy if you have relatives or friends or near a casino or they have Native American family. Trust me, if they don't have a card, go get one. because they do fit the guidelines for those. Yes.
Because I know we talk about everything, that's what she got me on the Native American.
Yes.
So ours is from Oklahoma. Do I have to go to Oklahoma in order to get?
No, you can
Because
just.
I have like my great grandmother's registration
Okay.
card, but they dropped the line somewhere,
Okay.
so it didn't trickle down. So I
You
can
can-
contact someone.
Yes, you can contact someone here. You make an appointment. Sometimes the travel leader will meet you there, or they'll recommend an assistant to meet you there. And they'll tell you, it's like DMV. You make an appointment. Don't just show up because there might be they're always busy. I mean, people think, oh, they're waiting for you. No, they're doing their community stuff and everything. We did a few presentations. It takes months to get into presenting this. Even tribes don't even know that this program is available. So we have driven everywhere we can. And it's not about gaining business. Is first, to gain business, you gotta build relationships, help the community, let them know that, hey, that's why it's like what Maggie's doing today for you guys is, hey, we're here if you need any help, because before we can get you into a house, we wanna know everything before. So once we're pre-approved, I make Maggie's life easier, because if she's gonna put a client, in her car, she wants to make sure we close the loan. And if I give you a pre-approval, that means that we're gonna get the loan closed. Because the last thing I wanna do is give you a pre-approval letter and then be like, oh, I did forget to ask you for something. So the nice thing is we do the in-house underwriting. We process everything in-house. And the only thing we're waiting for with our banks or investors, depending on the program, is just your future house, the subject property and the contract, okay? So the other nice thing is that we do have banks that allowed gift funds. For example, I have first-time home buyers that say, Rolando, it's been tough. I have good FICO, but I have no money, but I have a relative that can give me the whole down payment. Is that possible? Yes. Yes, it is. Someone can give you, I'll give you a scenario. I won't give you names, but I'll give you scenarios. I've done this 21 years. I work, I work with the banks, but my major client, in this case, will be Maggie. And then her clients are our clients because we want to get you guys in a house. So I do utilize the banking system, but I do it for your advantage to get you into a house. So a lot of clients get kind of confused why I don't work directly with the bank, but I do work with the mortgage brokers because I want to get you guys into a house. So my job is to look at 16 boxes and see which one's going to fit you best. The most important for me is, rate is good. I mean, I want to look for the best rate, but I want to make sure that I fit you in a box where I don't have any headaches for you guys or more delays or things like that. So the nice thing is with FHA, if you don't have, good morning, come in.
Good afternoon.
Oh, good afternoon, I should say, right? Come in. Would you like any water or anything? Okay, you're very welcome. So with FHA, you can do gift funds. For example, I had a buyer that says, Rolando, I'm gonna be ready in 3 months, but I have water? Yeah. You are welcome. Here you go. So I'll give you a scenario. So remember, my job is to look at the goods and the bads. My job is to make all the bad look good and the good look better. Remember, that's the difference between an experienced loan officer and a loan officer. So I'll give you this scenario. So this client was gonna be ready in 3 months, and I told him, don't wait at the last minute. Let's run your credit. Let me see exactly where you stand today. So if there are any negatives, we can fix them in the next 3 months. So one of the major things that we did was he didn't have money, but his relative did, but it was all cash. So we all know that banks don't like cash, or mattress money, or pillow money, however you want to put it. So I told him, okay, the rule says in all the banks that the banks and the underwriter want to see 2 months of bank statements with seasoned money, meaning that the money's already there, no large deposits. Large deposits are either cash that you already put in, or things you can't really paper trail. So I told this client, okay, so put all that money into the bank account like today. Don't wait for next month. Let it season. Once we get to 2 months of bank statements, there will be no more large deposits because it's an average for 2 months. So that's my job, is to kind of educate you. And that's what I'm saying, like all the bad, let's turn it on to good for your advantage. Because at the end of the day, I work for you. I utilize the banks and I work for you, okay? So, one of the major things, with FHA, is it does have mortgage yes.
I'm sorry, I just wanna catch things as
Sure,
you're going
Maggie.
over them.
No, that's
so
okay.
that,
That's okay.
It's fresh in everyone's mind. Now, you're talking about the banks
Yes.
and the cash deposits.
Mhm.
What about transferring from one account to
Oh,
another?
thank you, Maggie.
Okay.
Okay, so, good question, that was great. So, let's say you have, usually we have a savings and a checking, right? Okay, so if you transfer money here, as long as it's seasoned money, it's fine. You just have to make sure that you document it, and usually, most of the, bank statements today, you have checking and savings are all combined bank statements. But, okay, now, let's say that, Auntie Maggie and Uncle Dale are gonna let me borrow the money, okay? Cause this has happened. A good loan officer is gonna tell the client, hey, tell your uncle and aunt not to transfer the money, they already have it seasoned. So here's why I will use FHA over conventional. Cause see, I have to look at the whole package. So I look at 2 months of bank statements. See, the banks only ask for 1 month of bank statement from the donor. The donor is the person who's gonna give you the money. The reason why Rolando asked for 2 months is because I wanna see what has been going on. Because usually, if I have the money, okay, but I need the bank statement. And sometimes, let's say, I'm sorry, what's your name?
Alicia.
I asked Alicia, she's a client, I said, Alicia, oh yeah, my uncle, my aunt, they're gonna give me the money. And sometimes the buyer doesn't even have they promised her the world, they got it, they wanna do something good. But I always say, you know what, Alicia, we should just see it on paper. And what I caught on this scenario was that the money was half of the down payment, on Aunt Maggie's bank statement season, but for Dale is not. So what do we do there, okay? So in this case, it kind of worked out because Auntie Maggie had the whole down payment, but she only wanted to give half. So I came with the idea and said, Alicia, how about this? Because we can't use Uncle Dale's bank statement, can we use your aunt? No pressure, no pressure. Don't worry, it happens. It happens at the movies, it happens everywhere. And it happens to the best of us. So what I did with, let's say, Buyer Alicia, I said, hey, can we use all the funds and just have Dale pay back that money? But on paper, we're gonna do it as a gift fund. So that's my job. So I have to look at the transfers. So transfers are okay. What about if Aunt Maggie had a 401k? Can we use 401k? I'll allow you guys to participate. You think we can use 401k funds?
Yes.
Good, yeah, we can. Yes, we can.
And
And
they're
it-
not penalized either for it first.
Exactly, thank you. Now, back in the days, maybe 3, 4 years ago, FHA, you had to qualify. Even if it wasn't your own money, whatever Aunt Maggie was gonna give you, or Uncle Dale was gonna give, you had to qualify with the note, how they were gonna pay it back. That no longer applies, okay? So all they wanna make sure is that you show a 401k statement, that the funds are there, transferring it, being deposited. And the easiest way is wire money. No cashier's check, no check, just wire the money directly to escrow. That's the easiest way. So, trust me, a good loan officer is just, they wanna put the picture together. I wanna see the whole photo. Because before I send it to the bank, I wanna see all the goods and all the bads. Because we don't wanna rush it. A lot of my clients say, oh man, you asked for so many documentation. I go, well, it's because I keep most of the stuff with me. My job is only to give the bank what is necessary. If they ask for something, then guess what? I already have it. I don't need to keep coming back to you asking for more and more. Because all you're thinking about as a home buyer is when I'm gonna move in. Plus, moving, we're gonna move, we're gonna collect boxes. So what I wanna do with Dale and Maggie is get as many headaches off your backs as I can and get you guys into your house, okay? So any questions with FHA, conventional, yes,
What about transferring from a business account
Ah.
to a personal account?
thank you. Well, that's a little tricky, but you can still use business. Now, business account, depending on which bank you're gonna use, some banks will allow 60%, some banks will allow 100%. So if only certain funds are coming out of one business account, then I'll go to this bank. But what happens if I find a bank with a better interest rate, but they're asking for a little bit more? Then I have to come back to you as the buyer or the borrower and say, hey, I have 2 banks. If we go with bank one, that gives a little better rate, they're gonna ask for this. But here's my recommendation. For a higher slightly rate, they're not gonna ask you for all these conditions. So I always come back to you as the client and ask you what you wanna do. Because my job is not to make the decision, my job is to guide you to the best decision, and then you tell me which direction. But I'm always gonna give you my recommendation. I will never tell you all the good, no, I'm gonna tell you the good and the best. But yes, business accounts you can use, transfer and all that, as long as we paper trail, okay? Yes,
I have a question
Mhm.
regarding student loans.
okay,
So I was told that if you have if you do the conventional, they
Mhm.
don't look at your student loans.
so the way, that's awesome, okay, so FHA and conventional, this rule now applies. Most of our kids and even parents that have kids that are going to college, we co-sign, right? Okay, because I'm in the same boat. So the rule is, once we run the credit, let's say there's 5 different student loans. If none of them have a deferred payment already on the credit report, then the rule is 1% of the total loan amount. And that's what's applied to the purpose of the qualification. So for example, let's say you have a total of $30,000, you multiply that by 1%, that will be your minimum payment, okay?
You said that's if there is no deferred.
Exactly,
So
yes.
if there is, then.
If there is, then you go back to, I asked the borrower to call, and they'll get a letter saying this will be the future minimum payment for now, and we use that. Or if they say we can't do it, then we apply the 1% rule of the total balance, okay? Did everybody get that? But look, whatever I say today, I don't wanna overwhelm you, you can always call me, you can email me your scenarios, you can email me your questions or whatever you need. We're here to educate you guys and guide you because things change and rules do change. But maybe in the last year and a half, they haven't really changed, they've only gotten better for you. It's like, oh, they knew the rates were gonna go up, so they're gonna make it a little easier, but here we are. So, the other niche that we have is renovation. Everybody heard of the renovation loans? 203K. Maggie said the 203K, and that's what they
That's
are.
the old school.
The old, no, and that's what they're called, no, Maggie, that's what the 203Ks have been around for, oh my God, 20 plus years. So what's a 203K? I call it the renovation loans because it just sounds better, because it doesn't really attract a lot of people, but we do them. We do the 203K. What is a 203K? Okay, so Maggie and I are talking, you're her client, and, okay, you're qualified for, I'll give you an example, 400,000, okay? All right, well, you know what? I can't find what I want for 400,000. All the 4 bedrooms and the 3 bedrooms are close to $500,000. But the 3 bedrooms, 4 bedroom homes that I'm looking need a lot of work, and they're like $100,000 cheaper. But you're going, ugh, Maggie, what are you showing me? But you ask Maggie, show me 3 bedrooms and 4 bedrooms. So how does that renovation loan work? Okay, as long as you qualify. Maggie comes to me and says, Rolando, it's gonna need about $50,000 to $75,000 of repairs. Guess what? With the renovation loan, we can do it. We can put all the construction and the repairs into the loan. And your down payment is only based on the total cost. So let's say it's 300,000. So we do FHA and conventional. So conventional is 3% down, and FHA is 3.5% down. So it's based on the whole sales price. And the nice thing about it is you don't have to do anything. You just, as long as you qualify, we do all the work. And for the realtor, all you do is write the contract based on the listing price, and all we do is take care. And we have two great investors that make it so easy. Contractors, if you have I won't say a friend, but as long as it's a licensed contractor, and you trust, because this is why we chose these 2 investors over we've been having them for 5 years. Why we switch is because a lot of the clients have already a friend that they trust, that they know they're not gonna overcharge. But what happens if you don't have a contractor who's a friend? And you're afraid that I don't wanna go overcharge either, right? Well, guess what? The 2 investors that we have for this renovation loan, they have a minimum and a max. So if the contractor is overcharging you, they have to balance it out. Because the last thing the bank wants is for you to overpay on construction. Because I don't care how beautiful you want your kitchen, no one's gonna overcharge you, right? Okay? Otherwise, you're gonna go buy a new building, so we do renovation loans, interest rates, they're from conventional, as of Friday, they were about 5.5. FHA was 5.125. So they're similar to the regular loans, there might be about 0.25% higher, but can you imagine, you look at this house, it's exactly what you want, but it's just ugly. I mean, it's just like, it's not gonna pass anything, so with a renovation loan, you fix it to your taste. You can do whatever you want. And the best one is called the renovation 203. What is that? You can add a pool. You can add a barbecue. You can add a deck with patio covering. That's the best one. The minimum one is the one with FHA. It's about 35,000. You can't pass there, but you can't do all the fancy stuff. You can knock out walls. It's more basic, but it's whatever fits your budget. Okay. But if you fit the budget and you fit the sales price and you can do all the fun stuff, guess what I'm gonna give you? The best one, the renovation one, where you can add a pool. And yes, I mean, we have to have a yard for it, right? Because I had a client who was like, I want a pool. And I'm like, you have an easement. You can't, I mean, you're gonna have a lap pool. I mean, yeah. He's like, no, I want a real pool. I'm like, oh, that's hard. So we have to do, there's 3 types of renovation loans, or the 203K loans. The 35,000, the 60,000, and the unlimited one. Okay, and when I mean unlimited, as long as the appraised value is 2 appraisals, so they'll take the future. The cool thing is they'll take the future appraised value.
That was my question.
Yeah, they'll take the future. So that rule changed about 7-8 months ago, and that's why we stuck. Well, that's why we added another investor, because they already had it, and we needed something like that because the market has adjusted, guys. You're not gonna find all the pretty homes that were when the market was adjusting. Now we're in a different market, but you can still find a house, and even if it's an ugly house, we can make it pretty for you. So that's what we're here for, to let you guys know. Yes, sir.
When you take the loan to fix the house, is it separate from the first loan?
No,
Or
one loan, same loan. Thank you for that question. Same loan, yes. If it's one loan, there's not a second loan, it's one loan. Thank you for asking. Yeah, it's one loan. Okay, one loan. I'll give you another idea. Okay, what happened is, let's say Dale wants to buy a house, and he says, well, I'm working, I've been at my job for 5 years, 3 to 5 years, I'm making good money, but I don't feel comfortable doing the renovation right now, but it's not to my taste, but it's workable, I can move into it. Well, guess what? You can buy the house. Once you're ready, you can do renovation. We do refinances too, for renovation. So Dale can come back a year, 2, 3 years. Why? Well, I don't have equity. That's okay, Dale. With the renovation, they'll go to the max. So it's an awesome option for first-time home buyers, or if you already own a house and you call me 3 years later, a year or 2, and you want to renovate your kitchen only, you can do the renovation loan too, for a refinance. Okay, it's not limited to first-time home buyers, and it's not limited to just single-family homes. So it's a great option for you guys. So don't look, when Maggie shows you homes, if it's ugly, try to picture how would you like it. And the way I work with Maggie as a realtor is that we work out the numbers. I make a call to the 2 investors, and then I look at their rates, I look at how much it's gonna cost. I'm doing everything in-house. And then boom, then I present to you a nice email, copy your agent, and it'll give you all the details, what your payment's gonna be, and all the beautiful things you want. And if you don't have a contractor, I have 2 good ones that are already assigned with the 2 investors, and they do from San Joaquin County all the way to Sacramento, Contra Costa, and Alameda. Okay, so that's the renovation loan. And VA, we do VA 100% financing. So if you know any relatives and friends, or vets are coming back or here, one of the major things about VA loans is they don't have to be on a job for 2 years. I look at the whole scenario and I make a call to the banks and see what they can do for the VA, but we do VA 100% financing. We do manufacture homes. We do pretty much everything. The other one that I want to touch base is the last one at the bottom, the portfolio programs. What is a portfolio? Well, if it doesn't fit the regular FHA world or the regular conventional world, what does that mean? Well, let's say you had a foreclosure or a BK that doesn't meet the minimum requirement yet, but you wanna buy today, well, that's where I will put your portfolio program. They'll accept, 1 year BK, 1 year foreclosure, 1 year short sale. They require a little more down payment, they start from 10% and up. It could be gift money, but we have everything. We closed a couple this year, takes about 40 to 45 days. It's a little different animal, I call it, but it's a good rate. And then we'll put you in a good plan, so within a year to 2 years, we can refinance you into a better program to lower your but at least you're buying a house today, okay? So FHA, conventional, 184 programs, we do down payment assistance. We don't call it 100% financing, but we have the down payment assistance. I know for the 2 buyers that came in a little later, we do 100% financing, but we call it down payment assistance. And the rates are similar to FHA. We can do either FHA or conventional. We can close them in 30 days. We have 2 good investors that, I mean, they know it. Once you're in contract, and your minimum investment usually is about $1,000, which is when Maggie gets you in contract, you're gonna ask, the title company and the seller will ask you for earnest money deposit. You usually get all that money back or you get part of it, but that's your total investment, $1,000. And you can buy your house. And then what happens, you can always, it's a fixed 30-year fixed, so I'll tell you what I offer. I offer 30-year, 25, 20, or 15-year fixes. If anyone wants a variable, well, you gotta sign a piece of paper saying that you chose that. But in this market today, fixed rates, fix. Any questions regarding, or anything that comes to your mind, like, let me ask. Don't be shy, because I want you guys to leave here knowing that we're here for you, that it's not just about what we can do when you're ready to go buy. No, what we can do today to get you to that goal. Yes, Maggie.
I don't know if you went over the USDA loan.
Oh yeah, thank you. That's the one I missed. Okay, so yes, USDA. Everybody's like USDA. Like when I go to Safeway. Yeah, that's what they call it, USDA.
You and me there.
Yeah. So USDA is any rural area. Tracy is huge. Mountain House, Modesto, Stockton has a lot of French Camp. What is a USDA? It's 100%. It does have income limits. So once you're interested in USDA, trust me, once I get your application and I run the credit, I'm looking at all these options. And if I give a client like 5 options, he was like, oh, this is overwhelming. I'm like, I know, but you chose one, but I just want to let you know that you have these, because Maggie might just say, you know what? I know you didn't think about French Camp. I know you wanted Lathrop, but Lathrop we can't find a 3-bedroom, but I found a beautiful 3-bedroom in French Camp. Well, Maggie called me and says, Rolando, I know I saw the option when you copied me, and it said USDA. Can you see? So all Maggie